Hello and welcome to the Purse Podcast. My name is Jana Hlistova and we are changing the conversation for women about money and investing. I am super excited about my guest today, Barbara Stewart. Barbara is a chartered financial analyst with 28 years in the investment management industry, 5 years as a foreign currency trader, and then 2 decades as a portfolio manager investing on behalf of high net worth entrepreneurs. 10 years ago, Barbara saw a need to challenge outdated financial industry stereotypes and share a positive message about women and money. Today, Barbara is recognized worldwide as one of the leading researchers in women and finance. Her rich thinking global research papers quote smart women from all ages, professions, and industry. Barbara is a keynote speaker for CFA societies, banks, and stock exchanges around the world and conducts interview-driven research for financial institutions in Canada and globally. I hope you enjoy this interview as much as I did. Barbara, thank you so much for joining me today and welcome to the Purse.
I'm delighted to be part of this.
Thank you. I remember when I first came across your research, which was a couple of months ago. And then again, I saw an article that you published in City AM. And I thought I must reach out to you. I'm super excited about the work that you're doing around women investors and women as customers in financial services. So thank you so much for joining today.
My pleasure. And I'm loving to share this research any chance I get because I can see that a lot of people around the world are very enthusiastic about it. And I've met now with over 800 women for a 1-hour interview. So I've got a lot to talk about.
Oh, that's awesome. That's awesome. What prompted your interest initially in the research around women investors?
Well, as a longtime portfolio manager and in the investment industry for ages, over 25 years, I've always had an interest in women and money, and I've always seemed to attract a lot of female clients for one reason or another. And when we were going through the financial crisis over 10 years ago now, I wasn't enjoying my job that much, as many investors weren't enjoying their returns either. I felt really strange, and I thought, I'm going to just read everything about women and money and find another way to look at my work. And so I became very introverted about it and just kept reading and reading everything on bank websites and consulting houses on the topic. And it became even more upsetting because all the messaging was so negative about women, things like they don't take risk, they're not interested in investing, they defer their authority to men, all of this stuff. And I felt like this is a huge disconnect with my day-to-day experience with female investors who I know are very strong and capable because I've worked with them for years. So it occurred to me in an instant, in a flash, more born out of frustration than anything else, that I could help change the messaging if I interviewed really accomplished women. And I had the opportunity to travel. So I thought, I'm going to meet with women around the world and publish a report and quote them and release it on International Women's Day. I knew this was going to be a positive message that was very much needed to change the conversation. And I'm really happy that it worked. And I thought I was only going to do one report, and it ended up being so well received that I'm now just about to publish my 10th report this year on March 8th.
Which is amazing. And it's such important work, Barbara. And it's clear just from what we're seeing now and reading that the world is really waking up to women investors. And as you say, your work has been well received and is very much laying the foundation, I think, for a lot of this. So why is the world and the market kind of waking up now to women investors?
Well, as you know, in the investment industry, everything's always about numbers and money, right? And so that's what people are interested in. And what we know is going on now is that there's this huge wealth transfer that we hear a lot about, and it's the most important demographic trend around finance and investing ever, actually, in history. And so what the industry knows is that the bulk of this wealth transfer is going to women. So women have now become the number one target market for everyone around the world. And so the thing is, as we know, women live longer. Another thing that's happening is that these older women are surviving and controlling the investment assets that maybe in the old days, not so long ago, used to be controlled by the men. And so they may have had an investment advisor, but they probably didn't have a relationship. And women are very relationship oriented. So this is causing a major shift in the industry. And another spin off effect is that if the women are not competent, these older women, to manage the investment portfolio, maybe they don't have the skills and maybe they don't feel like learning at a much later stage in life, they will then ask one of their kids to manage the investment portfolio. And often when we talk about elder care, it's the daughter statistically that take care of these issues that now include managing investment portfolios. So we've got to make sure in the industry that the investment advisors are now talking to the daughters as well as the mothers. So it's all about women now.
Which is so fascinating. And you do talk a lot about how the industry needs to learn to communicate differently. Can you give us some examples of how they do need to talk differently to women?
Well, it's really so obvious to me, it's almost hard to talk about it. But, traditionally, the industry has been sort of this closed system of charts and graphs and lingo and jargon and confusion, making it seem so complicated so that the professionals, as they are, can feel good about themselves and maybe be respected by the client. But that doesn't work as well with a female audience because we kind of don't put up with that stuff for the most part. And we have a sixth sense when there's, what's that term, BS going on. So I think with women, you really have to be transparent when you're communicating. And it's just a question of being straightforward and telling it like it is, because I think with women to build trust, it's definitely about clear communication and asking them questions and asking them to be involved in the discussion to make sure that everybody understands what's going on. And also, obviously, avoiding any kind of condescending tone or assumptions are the worst thing, assuming that they fall into the old stereotypes that really don't apply anymore in today's world. A simple question to get a woman to open up and share would just be, what are the things that you're investing in around the house or in your day-to-day life? What businesses are you doing business with? What things are you buying, whether it's the Apple iPhone or, anything, any other brands that they're already doing business with? It's a great way to get started with a conversation about that.
I really like, again, your research into how important it is that we talk about stories, and it's stories and sharing for women, which will bring to life money and investing, because again, it's something that is easier to relate to. It has much more meaning.
Yes, and what best thing that's happened to female investors has been social media over the past few years, and it's given everybody a voice. And now there's so many Facebook communities. I mean, we were talking about Stockholm before this podcast, and in Stockholm, there's one community called Economista where they have 130,000 followers. And I was just on the phone last night with an investment club in the US. Volio, which is based in Canada, does investment clubs for women. And they're just so incredibly popular because women love to share. And it's a big thing with women, whether they're getting started investing or they're beginner or intermediate investors. They love to discuss their stock picks. What are they investing in and why? And it's almost obsessive with a lot of these investment clubs now. It's very exciting.
It is fabulous. We talked last time as well, Barbara, about this recent report that was published by Oliver Wyman. They're a global management consulting group. And a quote from the research was that women are the single largest underserved group of customers, and we've talked about this already, but also that evidence shows that approaches that may appear to be gender neutral, in fact, default toward men's needs and preferences. And I remember the first time I came across this, also in your research, I was quite stunned. And it is something that the industry is focusing on now and grappling with. And I'm just curious in your views specifically around how do we ensure that these products and services that the financial services industry makes available is now so much more tailored to the female customer?
Well, I think that's the question of the day. But absolutely, the existing system is for the most part based on the needs and preferences of men still today. However, as we talked about, banks and investment firms are trying desperately now to come up with that magic solution because this method of communication isn't working with their new number one target customer. And this customer is really a financially confident woman today. And so that's a new way of looking at it for the industry. And, one of the great examples out there of a bank who gets it, in my view, is Starling Bank, which is based in London, I believe, where you are.
Yes, indeed.
I was wandering around the tube station a few months ago in London, and I was shocked when I saw one of their posters, and I just fell in love with it. And the slogan was, "You're not bad with money, you're just with the wrong bank."
It's great.
That's so beautiful. And they have a series on that. And, I think that's the way to do it, to be provocative and realize we're not assuming that women are stupid anymore. We can't do that to survive.
It's fantastic. I'm actually a customer, so very
Excellent.
pleased to say. Now, we can't really talk about money and investing without bringing up this concept of risk. And
Mm-hmm.
again, in your research, you do talk about the fact that women are risk aware as opposed to being risk averse, which is a very new perspective on women and the way in which they choose to invest. And I think I mentioned this to you last time as well, that when we spoke, when I first read this, it made me so happy because, again,
Uh-huh.
it's a positive spin or positive take on how women choose to invest, how they consider what they're going to do with their money. And so it's a radical take on how women invest. And so why is this really important to understand, and also to understand the distinction between being risk aware versus risk averse?
If we look back historically in the industry, people who said they were the most risk averse were told to own a lot of cash and bonds and to avoid stocks, right? While those
Yeah.
who were supposed to be risk tolerant, they were advised to own more stocks. And so investing in equity markets was basically a proxy for risk tolerance. And so because decades ago men really were the ones owning the stock for whatever reason, they were seen to be less risk averse than money. So we came by that stereotype, honestly. But time's up for that because that's not the way it is today. Women are equity investors.
You recently worked with Excites, who are based in Istanbul, to develop a global quantitative survey on women and investing.
Yes, and the stats were that fewer than 1 in 10 women said they were risk averse, and nearly 3/4 of them said they were risk aware, not risk averse. And 16% of them self identified as a risk taker and said they had no problem with risk whatsoever. And interestingly, just under half of the people that filled in the survey said that over 50% of their investable assets were in stocks, whether it's through shares or funds or exchange traded funds. And a quarter of the women said their equity exposure is over 75%. So the numbers align with this radical thing, right?
Yeah.
But on the qualitative side, based on the interview discussions that I've had over the past number of years, my research has definitely shown that women are risk aware. And what I mean by that is whether we're talking with women about are they investing in a new venture or are they investing in the stock market, As long as a woman is interested and an investment opportunity is aligned with her values, then she will be motivated, very motivated to take a risk. And so she might take more time to make an investment decision, but honestly, that's because most women are meticulous about doing their homework. They want to delve into the details to their satisfaction, but then they'll really take calculated risks and invest. So it's important for investment advisors to know a female client might take a little bit longer to make a decision, but not to get frustrated by that, but just to have a much broader conversation with her so that she's totally motivated to get in it. And then they become the most loyal clients you've ever had.
I'm really interested in what you mentioned there in terms of aligning investing decisions to values. Can you talk a little bit more about that?
Yes, I'm clear that women prefer to invest in the causes and concerns that matter to them. And I'm clear on that both through my own rich thinking research and also because I've done extensive commissioned research with banks globally. And this is also the case. All of the work that we've done is 96% of women, I think, in the Nordics would prefer to invest in ESG funds than anything else, that kind of thing. It's a very high percentage. Now, on that note, again, in the industry, we have to be very careful because if a woman doesn't quite follow what's exactly in that ESG fund and an advisor doesn't take the time to explain it, that's a very risky proposition because you might not have a diversified investment portfolio. So even in that way, if you invest and you skew way higher in your overall portfolio to ESG funds, they're quite often more risky due to a lack of diversification inside the fund. So a woman, in fact, there again is taking on more risk than a man if that's the way that we're defining investing in causes and concerns. So it's just one of those red flags that we have to be careful about and really understanding what's inside all of these funds that we invest in.
Okay, I'm going to shift gears a little bit and refer to an article last year, end of last year, where you mention the fact that investors today are poised for disappointment in 2020. I think this was back in October. It was certainly before the coronavirus, but I found the quote really interesting, and I'm just curious what's ahead for investors, do you think, in 2020?
I think it's kind of anecdotal what I said that investors are poised for disappointment because at the time we'd seen, unprecedented highs in the equity market, which we're still seeing today despite the coronavirus. And then whenever you get that, people start to worry, of course, because hey, we're making so much money. This has got to stop, right? This can't go on forever. So you have investor psychology that can become a self-fulfilling prophecy where everybody's sort of starting to say, oh, well, I'm thinking of going to cash soon, but who actually is doing it? Because it's really hard to sell when you keep making money every single day. So we're still in that right now because a lot of these people that were saying they were going to cash, I don't think they have yet. And there's no real, if we take the emotion out of it, which is impossible, but if we remove the emotion and investor psychology and all of that kind of sentiment, then we're left with a market that, in my view, you're asking my view, still is looking great for the next year or two. I mean, I follow some people that I deeply respect. One of them who was in the article I was talking about, an independent BCA researcher, her name's Carolyn Miller. And I mean, this woman has done so much research into the market, looked at every fundamental and technical available, and there isn't an imminent sign of recession. And that's been corroborated by other firms that I respect. So if we look at what's actually going on and try not to get too scared by the, virus du jour, not to say it's not serious, but there's always something, right? If we look at interest rates being at unprecedented lows, and if we look at growth outlooks and earnings for actual stocks, I feel very optimistic that we still have room to go. And I'm certainly fully invested in equities in my own portfolio. So as long as you can not worry too much about interim fluctuations, we really have to keep focused on high quality companies, making sure we're invested in good businesses, and then using any pullback as an opportunity to add, provided that you have a long time horizon. it's really very basic. And I think, unfortunately, a lot of us get caught up in the hype and the loud voices on TV and that type of thing. And probably more important than my outlook on the equity market, because that's about as useful as anybody else's, nobody really knows, is making sure that you have a disciplined approach to how are you saving your money. And I think that probably matters more than which stocks you pick at the end of the day.
And what would you say that you're excited about then in the world of money and investing right now?
Well, it has to be my own work that I'm doing and seeing the impact in the world of the momentum. So it used to be, I felt very alone in this work 10 years ago and wondering about what was going on with women and risk and money and all of this stuff. And today, I'm not alone. And I've seen the entire conversation change, which is what we're talking about right now is perfect evidence of that. There's a lot more interest in positive messages. There's a lot more understanding that they're actually accurate messages. And so this whole global conversation is in the middle of changing. And I can't imagine anything more exciting than that, having felt like I've been a part of it and in reshaping something that needed to be reshaped so desperately. And also that the world is going to make money now rather than, languishing and having the industry basically die because the stereotypes were running the show.
Yeah, that's so powerful. So there's this sort of re-education going on, and I would say, it's being reshaped and driven by thought leaders like yourself, Barbara. So it's phenomenal work.
Thank you. But it's also being driven by individual women en masse, especially the younger generation. So when we talk about Stockholm again as a perfect example, and Southeast Asia as well, basically the same, you've got all these Facebook communities, you've got all these social trading platforms and investment clubs. And now younger women and older women have a voice. And we love social media. I mean, I wouldn't have been able to do any of the writing or have the kind of reach that I've had without social media. So it's given me a voice and it's given every woman a voice. And this has really been behind the big change, I think.
How did you use social media to aid your research?
Well, I've always been kind of shy and brought up in a family that was from England, where it was very traditional, where you were not supposed to talk about money. So I think I'm not alone in that. I had to overcome that shyness to have a voice. So it's been very difficult. But the beauty of social media is you can just write and publish stuff and put it out there. And so you don't really have to stand up on a podium and talk about stocks or anything like that. So I just wrote a lot and found that I really loved writing because I'm passionate about the topic, and then just put it out on every platform religiously.
That's amazing. It has become the glue and just a very quick way to get our voice and our views out there. And we're just more naturally prone to connecting, aren't we? And social media is an extension of that.
Exactly. And the number one thing I would tell other women, because you have this opportunity with this podcast, is if they haven't got started investing, the number one piece of advice I would give is to actually just get started and don't worry about whether you know enough, because we often tend to be perfectionists, myself included. And unfortunately, that will hold us back. And so, with all of these fun social platforms, you can just get on there and buy a stock and just buy something and sell it. Don't use all your money, but definitely use real money or you won't learn anything. But it's the fastest way to learn and just get practice without having all of the knowledge. And I found that that's why I love the investment clubs, because they're just in there buying and selling and discussing. And before you know it, you feel confident about it.
That's really, really great advice. So, assuming as an example, I've never invested, I have savings, and I know that there are platforms out there that allow me to invest and where the fees are fairly minuscule. How can I get started? So, how can I become a little bit more active, maybe using some of the platforms?
I've written quite a lot on this. So first of all, if that's a topic of interest, the listeners can go on barbarastewart.ca, and every article I've ever written is on there. And there's been a number that are about, for CFA Institute, I've written on various social trading platforms in various global markets, because
Great.
everywhere has a different one. But if you just Google, I mean, that lovely word works in this case too, social trading platforms, that's what you're looking for, or online investing. And the
Mm-hmm.
main ones will come up, and then you just go on, open up an account, and it's really straightforward. They'll walk you through it because all of these platforms are so easy to use now, and the communication on them is brilliant. So it's that simple.
And one of the things I really like about these platforms is that you can set up notifications. And so you can get a reminder, say every month or sometimes every week or every fortnight, that you should top up potentially. It really depends on the platform and how you set your preferences. But I think there was a piece of research, again, published a couple of months ago, which said that women tended to invest more so when they invested on these platforms because of these notifications, because of these reminders, which is a nice prompt. And it sort of encourages you to be consistent in how you invest.
Yes, and I think that those have been incredibly useful, and they're popping up everywhere, all these different types of apps. And that would be a great topic for another podcast, actually, to get into that, into local markets, about which ones women are using and why.
Yeah, that's a great idea.
But another thing to know is this Facebook community idea is huge. Whether you even want to be part of a community or not, you can follow. So I would also Google Facebook community on investing and just follow it, because a lot of these women that I've talked to that have become investors after knowing nothing were following a Facebook community for a year or two or three before they decided to go in and start investing. But they just learned a lot through, they have video tutorials and real women talking about their experience investing, and it can be so inspiring.
Yeah, yeah. And the education piece is so important. I mean, equally, as you said before, it's not expecting to know everything before you start. You can take, little steps. And actually, if you can invest even a little bit of money, it becomes very real, doesn't it? And you pay so much more attention, and the learning and the education can take place kind of in tandem.
Yes, and it's fun.
Yeah, it is.
It is. A lot of women tell me that it's fun, and now they've got their app on their phone and they stare at it all day, and it becomes compulsive.
I check my investment portfolio probably twice a day, I have to
Yeah.
say. I think you've answered my last question, Barbara, which was, what would you suggest to women who want to engage more around money and investing? I don't know if you want to add anything else to that.
No, I think my number one advice again is just get started now. Like, hang up from this podcast and go open an online account and buy a stock.
Yeah, that's awesome. That's awesome. Barbara, thank you so much for your time today. If listeners want to connect with you online, find your research, how can they find you? What's the best way to connect with you?
I'd be very happy to connect with anyone, and I welcome any ideas for future research or questions. I love to keep the conversation going. So my site is barbarastewart.ca. All my research is available for free there, all the articles that I write on this topic, if it's an interest. And otherwise, follow me on Facebook or LinkedIn or Twitter. My handle is @RichThinkingBee.
That's great. Barbara, thank you so much today.
Thank you, Yana. It was fun talking to you.